The cryptocurrency market experienced a significant upswing on Thursday as news broke that BlackRock, the world's largest asset manager, had filed to launch an exchange-traded fund, ETF, tracking the spot price of Ethereum. This development propelled Ethereum's price upwards by approximately 10%, breaching the $2,000 mark and achieving its highest value since April. By Friday afternoon, Ethereum was trading at $2,095, reflecting a renewed investor interest in the cryptocurrency. The filing by BlackRock, accompanied by Nasdaq's submission of a 19B4 form to the Securities and Exchange Commission, SEC, for the approval of the iShares Ethereum Trust, has sparked conversations about the potential broader acceptance of cryptocurrency ETFs. Market analysis. BlackRock's move to launch an ETF tied to the spot price of Ethereum marks a significant milestone for the cryptocurrency market. The rally in Ethereum's price underscores the growing influence of institutional investors and the increasing acceptance of cryptocurrencies in traditional financial ecosystems. This development comes amidst ongoing anticipation in the market for the approval of a spot Bitcoin ETF by the SEC. It's important to note that the SEC currently allows ETFs that track Bitcoin and Ethereum futures contracts. However, applications for spot Bitcoin ETFs have faced rejections, with concerns raised about potential market manipulation and fraud. The filing of an Ethereum ETF by BlackRock indicates a shifting landscape and raises questions about whether Ethereum could pave the way for broader cryptocurrency ETF approval. Market reaction and investor sentiment. The immediate market reaction to BlackRock's filing was notable, with Ethereum's price surging and reaching heights not seen in months. The positive sentiment surrounding this news suggests that investors are optimistic about the potential for a mainstream financial product tied to Ethereum. The filing of the 19B4 form by Nasdaq adds another layer of legitimacy to the process, signaling that established financial institutions are actively participating in the evolution of the cryptocurrency market. Market participants are closely watching for regulatory developments, as a successful approval of an Ethereum ETF could set a precedent for other cryptocurrencies, including Bitcoin. The optimism is, however, tempered by the SEC's historical concerns about market manipulation, emphasizing the need for robust regulatory frameworks to address these issues. Comparative analysis with Bitcoin. While Bitcoin remains the flagship cryptocurrency and the focus of much regulatory scrutiny, the interest in an Ethereum ETF indicates a potential diversification of investment strategies within the cryptocurrency space. Some market observers posit that if the SEC were to approve a spot Bitcoin ETF, the subsequent approval of a spot Ethereum ETF might follow, further solidifying the legitimacy of these digital assets in the eyes of traditional investors. Market experts also emphasize the differences between Bitcoin and Ethereum. Ethereum's underlying technology, the blockchain, serves as the foundation for decentralized applications, dApps, and smart contracts. This utility has led to Ethereum being referred to as a world computer, offering functionalities beyond those of Bitcoin. The filing of an Ethereum ETF could attract investors who see value in the broader applications of this blockchain technology. Challenges and considerations. Regulatory scrutiny and SEC hurdles. BlackRock's filing for an Ethereum ETF comes in the wake of the Securities and Exchange Commission's, SEC, historical reservations regarding spot Bitcoin ETFs. The SEC has consistently expressed concerns about market manipulation, fraud, and investor protection. Any approval of BlackRock's ETF would likely be contingent on the industry's capacity to address and alleviate these concerns, marking a crucial test for the broader acceptance of cryptocurrency-based financial products. Need for a comprehensive regulatory framework. The reluctance of the SEC to greenlight spot Bitcoin ETFs underscores the necessity for a comprehensive regulatory framework tailored to the unique characteristics of the cryptocurrency market. Crafting regulations that strike a balance between fostering innovation and ensuring investor protection is a delicate task. BlackRock's filing could prompt regulatory authorities to revisit and refine their stance on cryptocurrency ETFs, potentially laying the groundwork for more systematic and secure market participation. Rigorous scrutiny of BlackRock's filing. Given its status as the world's largest asset manager, BlackRock's filing is expected to undergo intense scrutiny. Regulators will likely examine every aspect of the proposed ETF, from its structure to risk management protocols. The outcome of this examination will not only influence the fate of the iShares Ethereum Trust but may also set a precedent for future cryptocurrency-based financial instruments seeking regulatory approval. Industry collaboration and response. Successfully navigating regulatory challenges requires a collaborative effort within the cryptocurrency industry. Market participants, including exchanges, developers, and institutional investors, need to work together to address the concerns raised by regulators. Establishing industry-wide best practices and standards could enhance the credibility of cryptocurrency-based financial products and contribute to a more favorable regulatory environment. Volatility management. The inherent volatility of the cryptocurrency market presents a significant challenge for the long-term success of an Ethereum ETF. While the surge in Ethereum's price following the news is a positive indicator, sustaining investor confidence necessitates effective risk management strategies. Implementing mechanisms to mitigate price fluctuations, such as circuit breakers or volatility controls, could be crucial for the stability and attractiveness of the proposed ETF. Educating investors. Cryptocurrencies, including Ethereum, are still relatively novel assets for many traditional investors. Educating investors about the unique features and risks associated with cryptocurrencies is vital. Transparency and communication about the nature of the market, potential price volatility, and the experimental stage of the technology can contribute to more informed investment decisions and reduce the likelihood of panic selling during turbulent market periods. Market liquidity. The liquidity of the underlying Ethereum market is a critical factor for the successful operation of an ETF. In times of high demand or market stress, liquidity can quickly dry up, leading to inefficiencies and increased trading costs. BlackRock and other industry participants must ensure that the Ethereum market can support the liquidity requirements of the proposed ETF, addressing concerns related to market impact and execution quality. Global regulatory coordination. Cryptocurrencies operate on a global scale, and regulatory frameworks can vary significantly from one jurisdiction to another. Achieving widespread acceptance of cryptocurrency ETFs may require coordinated efforts among regulators globally. Establishing consistent regulatory standards can enhance investor confidence and facilitate the integration of digital assets into the broader financial ecosystem. Conclusion. BlackRock's filing to launch an ETF tied to the spot price of Ethereum has injected renewed enthusiasm into the cryptocurrency market. The double-digit surge in Ethereum's price reflects the impact of institutional participation and growing acceptance of cryptocurrencies in mainstream finance. The filing also serves as a bellwether for potential developments in the approval of cryptocurrency ETFs, with implications not only for Ethereum but also for other digital assets. As the regulatory landscape continues to evolve, market participants are navigating the delicate balance between innovation and investor protection. The filing of the iShares Ethereum Trust by BlackRock and Nasdaq's submission to the SEC indicate a maturing market that is actively engaging with regulatory bodies to establish a more secure and reliable framework for cryptocurrency investments. The coming weeks and months will likely see increased attention on regulatory developments, market dynamics, and the broader implications of institutional involvement in the cryptocurrency space. Investors, regulators, and industry participants are all key players in shaping the future of cryptocurrency ETFs and their role in the global financial landscape.